Yeah, a D-shaped profile implies just a chopping day. I'm not saying you can't scalp, you can, but there's a lot of rejection up in here. There's a passive trend stream on the 30, there's a passive trend stream on the 1 hour, and there is notable POC right here from the week and yesterday that you're going to run into up through here. It's going to be a higher risk scalp if you want to do it. So this is nothing more than just a market structure type of a break. The problem that I have with it is, yes, you are in this D-shaped profile. You've got the POC from yesterday. You got the POC from the week right here. You've got the passive trend stream on the 30, the 1 hour. That's the reason that I have my bullish break. If this thing breaks and rips all the way through it, I'll miss this entire range, and that's totally fine with me. That's not my, it's not my preferred trade. Um, and I'll miss that pretty much 9 times out of 10. And that's totally fine with me. I'm looking for something else. And so what I would look for is price to one break out of here. That would show me that we have a false breakdown here in the cash session, right? Now we're going right into this passive trend stream here. And we got POC next. And if we break, if price comes through here, builds a bull flag right up in here, I'd look for that break to the upside. But so far, all we have is a balanced day. Even though this is a very highly bullish run here in context, we're not really choosing a direction on the day other than sideways so far. We start to break above here, you'll have my attention. Start to break above here, you're going to really have my attention. 59.23. This is your first indication that a trend is changing. This is your next level of resistance, right? So as you zoom out and look, as you zoom out from the smaller time frame into the larger, that next level, and so in here there isn't enough margin to make a trade here. Once price breaks above here and potentially builds this little builds a potential bull flag right through here, now I don't have much in my way in terms of resistance right through here. It's pretty wide open field up here if I get that bullish break. Same thing down here. It's pretty wide open through here. This is a lot of congestion, right? So if you look here, right through here, the value area of the week, once you break above this little node right here, this little high volume node, right to the upside, pretty smooth sailing up in here. There's not a whole lot of resistance, which is why, again, in the mornings, this is what I'm doing. I'm assessing where is value currently. And right now, it's pretty unmistakable. Value is right here, and we're just chopping within that value. Even if, and there's probably some setups out there where you can take these false breakdowns as flushes, like this one here, a false breakdown here, false breakdown there. But you want to be on the side of the trend, and so far there really isn't a trend other than the most immediate one, which is a downtrend to sideways, and we haven't broken that sideways yet. We've dipped below it a little bit, only to be brought right back to the mean. So when that shifts or that changes, whether we're going to, yeah, I mean we're just swapping 30-minute candles back and forth essentially, down, up, right? I don't want to be in that. So the question of the day is, are we going to come down here and fill this new week opening gap? This gap up from the week open, that was my preferred play, has not materialized. Secondary play is, are we going to break out of the weekly value area and start to retrace some of this rejection up here and make another run at 6,000? Those are the two options. And the third option is we do nothing and do this all day. Yeah, these are fairly difficult to assess, especially if this doji candle here is in the middle. All that really means is the market has no idea what it wants to do. And when you're coming off of a day where the market does not know what it wants to do, it opens right where it closes. You want to exercise a little bit of caution going into that next day and really force the market to show you its hand. And if that means that I miss this value breakdown from here to here, that's fine. If that means I miss this value breakout from here to here, that's fine. There's likely to be another shot later on in the day. right? So you want to, especially when you see these doji days. Now it is slightly bearish. That was the basis for my. There's more. When I say bearish, I mean it was the NQ was a little bit more pronounced on the bearish side, and there was more rejection of higher prices than of lower prices, right? So you kind of have that slightly bearish, almost a shooter candle. I mean, obviously not almost, but it was the NQ was a little bit more pronounced on a slightly bearish. And if the NQ was indeed going to lead the day down, I was looking at that to see if that would develop on the NQ. It didn't, and so far nothing's developed. So if this does indeed materialize um, into a balanced profile for the morning session, you guys remember what my rules are on that. So I would be looking for something like, we'll just grab this whole one here. Here's my range high, and here would be my range low. You could possibly even go all the way back. It's about the same. Could possibly even extend that out a little bit. And then what you would maybe even up to here. So then what you would look for in that PM session, you would look for price. Let's say we just bounce back and forth between here, right? So what you would look for in that PM session, you would look for this D-shaped profile to hold. So when price gets up here, you're going to look for those reversal signals. And if there's weakness of buyers and strength of sellers up here, you can go ahead and take that, sell the highs. Same thing down here. Strength of buyers, weakness of sellers down here, you can buy the lows. Now, in this instance, I would prefer to sell the highs because you have this trend and this sideways chop action holding you, at least giving you the trend is your friend type of inertia to the downside. Down here, it's a little bit more risky to buy because you do have that PM breakout that can take place. That's the way that I would look at this going into the PM session.
Hey everyone, it's Dale here. I hope you enjoyed the video. If you like to trade alongside me and our team of prop firm funded traders every day, then click the link below the video and hop aboard. We are looking forward to trading with you.